Hey, welcome to the live stream. Let's see what the market's doing today and see if there's any opportunities to get into some stocks.
Got a lot of good stocks to talk about today, guys.
Stocks are popular, but I want to make sure they're valuable. But I want to make sure they're valuable. If you look at the best companies on the stock market, the most valuable ones. The most valuable ones.
Where do I start?
All produce high free cash flow. High free cash flow. That's why I'm looking for high free cash flow. All the best investors depended on free cash flow and evaluating a company's ability to generate free cash flow. A company is not the stock price, and the stock price is not the company. They're two different things. Two different things.
Hang tight.
The big cap stocks have taken the show, but are big cap stocks going to come back?
Hard to make
Chinese stocks are exploding. The dragon has awakened in China, and could be the best trade we've seen in a while.
Saeed,
really interesting.
Are you, sir?
AI is going to be interesting in the future. But
you know what you want to talk about
really
today, man?
A business
in your
today?
stocks.
I'm going to pass on this stock. Just not enough discount.
Beautiful day.
And I'm not really believing that they're going to grow as well as they should. Options can make your performance go a little higher every month and generate nice income. Listen to the great super investors. They are pretty generous with their knowledge and their wisdom. You just got to read their books and listen to their videos. Learn something new every month. In investing, you'll become a great investor. You'll build wealth. This is a buy stock. You're looking at a discounted stock, and it's unappreciated at this time. Don't forget about bonds. Bonds are a smooth, consistent way of earning a good return. And when stocks are really crashing, bonds stand up tall. Bonds stand up tall. You got to ring the cash register and take a gain. Defining when to sell a stock is a lot harder than determining when to buy a stock. And over time, you'll become a great investor and you will build great wealth.
Hey, everybody. Thanks for joining my live stream. Boy, it's such a fun day to cover. The stock market was up real nice today. The NASDAQ was up 1.52, S&P was up 0.94, Dow Jones up 0.75. And this is after Friday. We had a pretty bad day. There was a lot of tension in the world with Israel and Iran being in conflict. Hopefully that gets resolved quickly. But that created high oil prices, created uncertainty and fear, and that led to prices going down. So it was an opportunity to buy on Friday. So I don't know if you bought stocks on Friday, but when there is fear and people are just trading off of that emotion, it's a good opportunity for the rest of us. Because if we can trade and invest on fundamentals, valuations, we make money. I like that. The logical make money. The ones that can stay on the course of looking for great businesses that are underappreciated, undervalued, discounted, buying them at the right moments, that investor makes money. That's the way it should be. Let's take a peek at a couple of things. Just looking at the market at large. Year to date, the S&P is having a somewhat decent day. If you annualize that rate of return, we're like at 6% on the S&P. So that's underwhelming comparing the 2025 year versus 24 and 23, which were really good years. Over the 1 year, the S&P is up 10%. Again, that's pretty decent, especially historically. That's very decent. And over the 5 year, I mean, you can't complain about your money going up 94.76%. I don't think anybody should complain at that rate of return. So that looks really good. The NASDAQ's done better just because a lot of the NASDAQ stocks have really flourished. And over the 5 year, this has done 98% rise, very good. Some of the big technology stocks are in the NASDAQ, and that's why it's done so well. What's crypto land doing? $108,718 will buy you 1 Bitcoin. That's a pretty good appreciation curve. Man, Bitcoin's been a winner, a real good winner. Good job, Bitcoin, and everybody who's invested in it. What a good year. Up 64%. Year to date, it's up 16%. Over the 5 year, up 1,061. Beautiful. This is one of my winning investments, Bitcoin, and really glad that I started investing way back when. So Bitcoin is on fire. Shadow Guy, hello and good night, sir. Thanks for tuning in, if anything, just to say hello. And I hope you have a good night. Sergio, so the S&P is up 10%, but the dollar value is down 10%. Interesting you state it that way, huh? Good point. Okay, so what are the things that I want to cover just high level? So we've got the big currencies. I think Asia, Futu stock was on fire today. And that usually has to do with how the market in Asia is trading. Futu Holdings was up 10.77. Now this has a small market cap of 11.71 billion, and it's just a really good company, flourishing. I've been buying into the stock. Look at this volatility. The market just begs you to buy this stock. Just says, please buy this stock at a discount so that you can make lots of money over a couple months. So that's what the market really provided in Futu. That's a great, great return. The Chinese stocks have been really doing well. This year, they're doing great. Year to date, Alibaba up 36%. This is the biggest cap in coming out of China. It looks really good. Up 55% over the 1 year. Go Alibaba. It now has a market cap 276 billion. It has plenty of addressable market to keep growing, keep getting bigger, more money, all that good stuff. And Shadow Guy. Nope. Thanks for joining the stream that I had with Scott. Right, he had a stream and I joined his stream, just kind of dropped in. And I appreciate you joining. Really appreciate your whole involvement in the community. Thanks so much for bringing it. Sergio, Reddit was up, absolutely. Mike, the dividend investor guy. It's after midnight in Switzerland. Yeah, me too. Sign me up for that. I like a good night's sleep. The older I get, the simpler life gets for me. I like a good healthy meal, a good night's sleep, and some great stocks. I'd probably put them in the order of give me some great stocks, give me a good night's sleep, give me a really good healthy meal, in that order. So Alibaba's doing great. So China's doing well. China is really getting it done, and I'm glad that I own those stocks. It's really a matter of buying these stocks when everybody hates them. I mean, Alibaba just very quickly, you can really increase the wealth that you have if you buy stocks at the right time. It's not about following the herd. At least, let me state the philosophy that I follow, the investing strategy. And that is, it's good to understand what the market's doing. It's good to see where momentum is. That's just being part of the marketplace. But I don't invest based on momentum or what's popular and so forth. I invest on fundamentals. I invest understanding the desirability of a business, the big picture, really buying into a business, and then trying to hold that stock long term. So a few exceptions that I'll buy with the expectation that I'm going to own that stock over maybe a moderate term, 6 months, 9 months, 12 months. But in general, I would love to keep stocks for a long time and just see my capital compound double more often than every 5 years. If I can do that, I will be a very happy camper. I'll feel very fulfilled and feel like I'm accomplishing so much because that adds up to a lot of money for me. So it's a game that I love playing. It has a very good outcome and reward for playing it right. And the way that I invest is to really do qualitative analysis, look at fundamentals, look at cash flows, look at profits, look at the growth rate of a business. Make sure that all things are lining up that business is going to do great. Alibaba is such a business. It really does have very good fundamentals. If you're a member of the channel, you can see all my analysis. I publish all the analysis that I do on companies' valuations, and you get to see that listing anytime, 24/7, because I post it and members can see it. I actually had a video today just for members where I went over my buys for the week, as well as I kind of gave everybody a tour of that sheet that I'm referring to so that everybody could reference it whenever they'd like to see my research. So if you're not a member, consider being a member, then you can have access to that. All right, the comments are coming in and I changed the settings, so I hope this records the recording of this video. I hope it comes up with the comments, and I will see after we get done. This thing gets released. I'll see if I clicked the right buttons to make that happen. All right, so Sergio talked about Reddit. Do I have Reddit on the list? Yeah, I've got Reddit on the list already. Oscar, got Oscar on the list. Nico Rokon, what's up, man? Is up 7-8% aftermarket after the news that Medicaid cuts are removed from the tax bill. Beautiful, great. Man, why can't I have Mondays like this every Monday? I mean, I take the rest of the week off. All right, Saeed, SQN. I don't think I've ever looked at SQN. It's a Swiss company. So we're going to look at that guy, see what that looks like, see if it's looks like we should invest our minds, or I think our time in looking at it, doing a full evaluation. Let me catch up on comments and then we'll dig in. So Mike, the dividend investor guy, had Baba and Futu both, but both sold them after a good gain, didn't hold to get the great gain. I appreciate that, Mike. And sometimes you sell at the right times and I sit on a stock and I'm like, man, I wish I would have sold when Mike sold. So get him next time. Good stuff. All right. Awesome. All right. Thanks, Mike. And before I forget, it's a day late, but hopefully just wanted you guys to hear it, is Happy Father's Day to all the fathers out there. I'm a dad, and it's a joy to be a father. And my sons are 20 and 25. And I really embraced the experience of being a dad, and a lot of my investing, my purpose, a big part of my purpose and my journey is to be a good father and to provide for my family. And I think that's some of the fuel that drives my endless hours of analyzing companies, trying to get better, and trying to really grow my wealth for the benefit of my family. So all the fathers out there, I tip my hat to you for taking care of your families. Hopefully they took care of you yesterday, made you a nice meal, nice barbecue or something, took you out to the movies. I enjoyed a ball game with my son, and man, that was great. So, all right. So let's get into it. I'm going to start because I'm going to talk about AMD. And I think it's Mike, the dividend investor guy, has liked AMD for a while. I haven't, but I've heard news that make me think maybe I've been wrong. And here's the news that I've heard that AMD's semiconductors, specifically their GPUs, are beginning to compete with NVIDIA from a performance perspective. Well, that changes everything, folks. If AMD can compete in that data center, which they've been focused on for a long time, then we've got a game, folks. We've got a competitive game. And NVIDIA is a $3.5 trillion market cap. AMD is 205 billion. So AMD is less than 10% of the market cap of NVIDIA. I imagine AMD's market cap to go to $1 trillion. If that story is truth about the future, look out, AMD. So I got to take a close look at AMD. So let's take a close look at AMD to get started. And Saeed, please bear with me for a few minutes. I'm going to cover SQN. That's next on the list. I just had AMD on my mind and I wanted to jump into it. So I don't think I have AMD as a company that I've analyzed. Nope, don't have it. But I do have the great NVIDIA. And I've done, 10 videos on NVIDIA. I think it's priced a little too expensive, but that's my opinion. I think Astera is the buy that I had, and it's doing great. It's doing awesome. Go Astera. They had a good day today. Real good day. All right, so we're going to do a full analysis on AMD, see if maybe I need to rethink what AMD is about, see if that's the stock that's going to take the elevator up and take my maybe $10,000 and turn it to $100,000, or take my $50,000 and turn it into $500,000. Let's take a look. AMD. Now, my complaint about AMD in the past is that they don't produce a lot of cash, but maybe things have changed. Let's take a peek. All right, so AMD, as mentioned, is a $205 billion market cap company. Had a good day today, up 8.81%. And I heard that story, by the way, at the end of last week. It wasn't, this morning when it was flourishing like that. And some of the stories out there, so some optimism that they're catching up. Okay. The other thing that I like is, man, Intel is such a dumpster fire. They got so many problems. The AMD may come in and start taking share away from Intel in addition to the data center. So some things may be forming to really benefit AMD. All right, let's take a peek. So PE is really high, 92. Forward PE 31. Okay, they better be growing because these are really high PEs. Price, okay, 12% is the discount according to analysts. So that's some pretty decent growth. In the full year of 2024, they grew 13.69%. That's pretty decent. They've got a pretty big number, 25 billion. Now, in the trailing 12 months, it's even better. Let's take a look. Man, that quarter looks beautiful. Look at that, 35.9% growth on a pretty big number. It's very good. Very good. So the growth looks good. They grew nicely back here in 21. They had kind of hit a wall. They hit the wall in 2023 and then started to grow again. Okay. Okay, so the growth is good. I like the growth. Not growing as fast as NVIDIA. Astera Labs is growing at 200%. That's a small cap. Qualcomm is growing about that rate, by the way, just to keep score. Free cash flow has been expanding, but it's not like superb cash flow. So far, based on the fundamentals I'm seeing and the possibility that they can get competitive with NVIDIA in that data center, I multiply this times 40, and I'm going to get to about 105 to 110 billion, well short of their market cap. So that's where I kind of fall apart on AMD. I'm like, geez, where's the cash? These guys have been around for a long time. It's not like they're a startup. I can get a better cash flow yield from Astera Labs, and they're growing at 200%. And get a better PE from Astera Labs, and get a better PE from Qualcomm, and stupendous cash flow. So this is where I usually opt out of AMD, and I'm not feeling any different. They got to do better. Where's the cash going? These guys I don't think they run their own foundries. Take a look at their cash flow statement. That might answer some questions for me. Statement of cash flows will show us where's the cash going? Where is your cash going? Why are you burning so much darn cash? See, the operating cash flow isn't very good. They don't spend a ton of capital, which is fine, but this operating cash flow just isn't all that great. What about what's their margins all about? Gross margins. See, this margin number is lower than what we find with NVIDIA, Astera Labs, even Qualcomm. So Qualcomm's been kind of the established semiconductor stock that I've liked. I like Astera Labs. It's exciting, but talk about a proven company, $42 billion in revenue. Look at that, 16% growth. Very good. Now, when we look at the free cash flow, very high free cash flow. You see that cash flow, 11.7 billion. And AMD's at 3.5, 3.7 billion. It's not very much. The margins are about what AMD has. Just AMD can't get a lot of cash down to the bottom. So that's where I'm at. I mean, I got better choices than AMD. So I am going to stop there. It's still the same game. It's still the same situation with AMD and me. AMD doesn't like me. I don't like AMD. Let's just say that we don't mix. We're oil and water. And that PE doesn't mix well with me. The low cash flow doesn't mix well with me. So I'm going to stay with Qualcomm. I'm going to stay with Astera Labs. I'm good with those two stocks. And I also have Lam Research as a third, which is doing really well. So I'm good. I'm good. I'll just watch AMD and see if they truly have caught up with NVIDIA. If they have, good for them. Good for them. Once their fundamentals start showing me that they're improving, maybe I'll jump back in, but not for now. All right, let's move on to SQN. This is a Swiss company. So let me get read up on this company. So Swiss Quote Group Holding Ltd provides online financial services to retail investors, affluent investors, and professional and institutional customers worldwide. It operates in two segments, securities trading and leveraged forex. The company operates an online bank and accepts multi-currency deposits, withdrawals, including crypto assets. It offers securities trading services such as custody services by the means of tools to trade in real time in a palette of asset classes, and access to a set of investment decision-making, risk monitoring. I'm sure it's tools. So this is a interesting company. It reminds me of Robinhood and Futu. Now, why was it down today? Interesting. So year to date's up nicely, but it's been selling off. It announced earnings on August 12th, which was, I'm sorry, it's going to announce on August 12th. So I think this company may announce twice a year. Companies in Europe tend to announce twice a year, not 4 times a year. So what's the news that's driving this stock lower? I don't see any news that's driving the stock lower. The market cap of Swissquote is 7 billion. Revenue is 687 million. We are dealing with CHF currency. All right. And CHF, how many dollars are in a CHF? So to buy 1 Swiss franc, you'd pay $1.23. So when we look at this market cap, we're actually seeing a company that is 23% higher than this. So it'd be probably about 8.5 billion in market cap. Everything else would be 0.23, 23% higher. So the PE looks pretty decent, 24, and then forward P is 23. And I think the person who asked is located in Europe. So this is probably a more comfortable investment for him than it would be for me. Although I do invest in companies in Europe, no problem investing in Europe. Just if you're closer to where that investment's at, it's just a better idea. Revenue growth for this company, 24%. Very good. Very, very good. The revenue is 687 million Swiss francs. So that's going to be probably about 850 million Swiss francs. Okay. Free cash flow looks great. It looks good. Now let's take a look at their specific income statement. The reason for it, I want to see how the revenue split out. Are they charging trading fees? How are they making their money? Well, I didn't get there going through that. So let me go to their website directly. And their website should have a investor page. So this is their website. All right. Hopefully it gives me. So this is sign up. No, I don't have it. Okay, so I wasn't able to get their financials. So let's see if we can get a good understanding looking at their income statement here. So they have interest and dividend income, okay. And they have total interest, brokerage commission, 283, good. Trading and principal transactions, 183, okay. So they're earning interest and they're charging fees. Fees is a brokerage. So, all right. So this is a good financial services company. I've seen Robinhood flourish, Futu, even some others have just been doing great. So maybe this one's going to take off. What's the stock been doing? Let me see if I can graph this a bit. So this one year to date is up 22%, but very recently it's down quite a bit. It's down over the last couple of days, 10%. Over the 1 year, it's up 53%. So it's right there with, these financial services companies are doing really well because there's a lot of trading going on, a lot of stock investing. So they're doing well over the 1 year, over the 5 years, super winner. Very nice. Okay. All right, good. So I like what I'm seeing, some really good things. I'm going to keep that open for a bit. Okay, so let's take a look at what's their free cash flow number. So 1965. Now, the thing I don't like is when you have data that's all over the place, right? In 2021, it was 1.5 billion, then it was 440, then it was 239, now it's 19.65. So I think I'd rather take a 5-year average and see where we land. So I'll do that as I review the company. And so we have some adding up some numbers, and then we'll get back to you in a second. See, when you have data that's really all over the place, you're really guessing at what's it going to do next. So to make life more predictable or more conservative, I like taking an average. Then I know, okay, on average, this is where they're going to come in. All right, so the average is going to be about 960 million free cash flow per year. Okay, so that's going to be our average. It's growing nicely. The business is growing well. Let's make sure that the balance sheet's in good shape. So they have lots of cash, 6 billion in cash. Nice job. So 6.03 billion. And remember, we're dealing with Swiss francs. And then we have debt is 209 million. Okay, so this looks good. The fundamentals are looking really good. Let's see if it's priced too high or if it's all right, properly priced. Excuse me. Okay, so since everything's Swiss francs, I'm going to keep it Swiss francs. Let's go to a valuation spreadsheet. I'm not going to need to keep AMD. I'll compare this one. I'm going to compare it to Futu. Here's Robinhood. Here's Futu. These are similar, but in different countries. There's Interactive Brokers. So go ahead and get started here. Bear with me. I'm trying to make enough room down here so I don't delete anything. And I think I need to put the symbol ahead of it. So Swiss SQN. Yep. Okay. So I put 11 on Futu, but maybe this one's a 10 for me, but lower for you because you're in Europe already. And I'm speaking to Saeed. All right. So my estimate, taking the 5-year average, and I'll just put that in there. It's 960 million. This is all francs. So And if you join the live stream, I see your comments from the side from my peripheral, but I'm going to get to them in about 10 minutes. I'm trying to finish this valuation and I'll get back to you. So I'm going to say they're going to grow by 15% on the free cash flows. So that's going to give us this forecast of free cash flows. So the intrinsic value is 22.774 billion. The cash is actually much higher at 630 million francs, Swiss francs. And then the debt is only 209 million. So that's lower. Now the market cap, and is that correct? What's the market cap of this company? The market cap showing 7 billion here. Well, I think it's my shares outstanding. Shares outstanding is 14.94 million. Okay. Okay, so the company looks nicely discounted if you look at cash flows. And the stock price is 433, is that correct? Yep. Shares outstanding. Okay. Just curious why this number is not matching stock analysis. It's at like 7 billion, but it's still highly discounted, which is good. So looking at their earnings per share, and I don't have any analyst opinions on this, but I guess we're going to look at earnings per share on the financials. So there is earnings per share. It's been going up nicely in the last trailing 12 months, $19.70. Okay. Yep. So this stock's gone up really nicely over the last 5 years. It's gone up nicely over the 1 year, but they're making a lot of money. So they continue to just go up, and it's still a small cap at 7 billion Swiss francs. The free cash flow is expanded, although it's not a smooth expansion. It's gone quite a bit higher, and I used the 5-year average on my valuation. The earnings per share has expanded. Nice smooth data, right? Nice upward trajectory on the data. That looks good. When we look at the profitability of the company, profit margins look fabulous. 42.8. What is there not to like about that type of profit? And then the free cash flow margins look good. Why is that? So, what's in that cash flow that is included that makes cash go up so much? So this line looks normal. Okay, that's okay. So operating cash flow is expanded. Okay. And then very little capex. So that one, the fundamentals show that the stock's discounted. Now it's out of my home country. I'm invested in Robinhood most. That's a big investment that I have, big position. And then I'm investing in Futu because I want exposure to China. This one here, if you're in Europe and you see this company, you're familiar with it, you have a good comfort level with their business, you believe, hey, they're doing really well, they're growing nicely. Man, I can't argue with an investment in this one. It just keeps going up in value, but they have the fundamentals to back it up. And the pricing doesn't look all that crazy, right? Like AMD had 93 PE. This one's at 24. And these guys are growing nicely. Their revenue growth is really good. So it's a good one. Looks good. Hopefully that helped. Good luck with that one. All right, so just going to make myself a little note to delete this at some time in the future. All right, so let me get back to these comments. I think some people wanted me to look at some stocks. So David Knight, good to see you. Good luck with both AMD and Micron. Okay, update on DocuSign. Glad to. So we're going to look at DocuSign. And then Ozik, working and listening. Nice, multitasking. Thanks for joining. Cream Bigums. Thoughts on SoFi or Upstart? How about both? So SoFi and Upstart. Glad to provide some comments there. Saeed. So that brokerage deals in the Middle East, and that's why it's down. Okay. Makes sense. And AMD is rising because that's what they're bringing to the table, which is greater ability in that data center. AMD's first true rack scale solution, codenamed Helios, will feature up to 74 fully interconnected GPUs powered by the upcoming MI400 series accelerator, next gen EPYC processor. All right, sounds exciting. We'll see where it goes. Okay, so let's head into DocuSign. So DocuSign had good earnings and it sold off so bad. And that's what it's done. This stock, the market just moves this stock so radically. Look at these moves. The stock had a very good fall. Fall period, I should say. And it rose 111%, 115% over 5 months. And then the market has been selling it off, especially after earnings. After earnings, it just sells off, but then it gives us good pricing and we could buy and make money. Most recently, it sold off after earnings. It went down 19% in one day. Whew, brutal. I'm sitting on a nice gain of DocuSign, so I'm good because I bought down here. And if you bought at the right times, you're good. If you bought at the wrong times, it's really tough. But here, the stock's been selling off. I think over the last 5 days, it's seen a couple moves up, but still over the last 5 days, it's down. So it's presented a proposition to investors. I think DocuSign is solid. When we look at the business, it's a $15.28 billion market cap. PE is 14. 14. Analysts think it's discounted by 20%. The company's growing just shy of 8% over the trailing 12 months. It's about a $3 billion business. And I really like their margins and their free cash flow. When we look at their cash flow, $916 million. It's had nice growth in cash flow. We look at gross margin, 79%, profit margin, 36%. Stock market, what do you want from DocuSign? Why are you killing this stock? These are terrific numbers. Now, is that growth breaking any records? No, but it's sequentially, they continue to grow year after year. So, I still like DocuSign. I have a pretty good position of DocuSign. I own, how much DocuSign do I own? So I own $31,900 of DocuSign. I'm not selling one share. Might buy some shares. It's just a good company, good stock, and I'm good with it. And I think it's going to be an acquisition target. We'll see. So DocuSign's a stock that I'll continue to buy. Got no problems with it. The software company that I'm probably most excited about, I mean, there's a good list of software companies that are beaten up. Adobe, beaten up, underappreciated, just great value. Remember the chart I showed on Alibaba? At one point, everybody hated it, and that was the right time to buy. And I think some of these stocks are going to tell us that in about a year. Say, hey, you know, DocuSign was at 75, now it's 150. And you're like, oh, man, when everybody hated it was the time to buy it because the fundamentals were great. Just everybody hated it. All the forces on Wall Street were hating on DocuSign, Adobe, CRM. Well, those are terrific businesses. I love their margins. I love how much cash they produce. They're just a very desirable type of business. DocuSign continues to be a buy for me. All right, SoFi and Upstart. So SoFi is a new generation company. SoFi Technologies provides various financial services in the United States, Latin America, Canada, and Hong Kong. It operates through 3 segments: lending, technology platform, financial services. The company offers lending and financial services and products that allow its members to borrow, save, spend, invest, and protect money. Personal loans, student loans, home loans, related services. Okay. This one here is not a stock that I've invested in. I've invested in Robinhood, Futu, and others. And I think that's the lane that I like. I also invested in PayPal. PayPal has not been a great investment. That one's been kind of a dog. SoFi is 16.47 billion, so small cap, not a big cap. Revenue 2.77 billion. So looking at revenue, you're only paying like 6 times revenue, which isn't bad. PE is a little high, 35. Forward P is 46. Analysts think it's a little pricey. Year to date, not getting it done. It's down 3%. Looks like it's had a nice rise recently. I think buying at the right times, of course. When everybody hates a stock, it's time to buy it if it has the right fundamentals. Because looking at SoFi, when everything was crashing and burning back in April, this presented a really low price and investors are up 56% since then. So that looks really good. So PE is high. Valuation isn't too bad, 6 times sales. Let's take a look at growth. Growth is good. Now, it's not a huge company, 23%. Okay. Growth is good. It's not incredible, but it's good. Cash flow, and this is more like a bank, so I'm going to look at book value. Earnings per share have been getting better. It's now in the positive zone. And the profit margins look good. So profit margins look good. We're going to get book value out of the balance sheet. We wanted to see it grow. So the book value has been growing, but not a whole lot. 558 to 605. It's not very much over what it is going to be about 3 years and a quarter. So book value is okay, not overly amazed. So this one here is not, it's not a stock that I totally get, totally believe in. I think they're in some categories where there's lots of competition. I don't like that. I'd rather see a company that really just dominates their space and makes it theirs, like an Uber or Robinhood to some extent, kind of dominating that younger investor space. This one here, I just don't see where they dominate. I think they're kind of me too in several markets, and that worries me. Not the only one that's worried, right? This one over 5 years, you would have made 35% if you owned it way back here. The 1 year, wow, you made some money. Year to date, you lost a little bit. But the 1 year, look at that rise. Beautiful. Awesome. It really did come down at the from the high in January to the low was down about 37%. So it's been a little bit of a wild ride, but most stocks have had a wild ride in 2025. It's not only SoFi. So SoFi continues to be a stock that I don't get it, and I'm going to leave it to other investors to invest in it. I think Mike really gets it. He invests in it. Cool, great. I hope you keep making money on it. I just don't get it, and I'm going to invest in stuff that I understand, stuff that I believe in, where I understand the big picture, see the fundamentals. And I don't quite get there with SoFi, so I'm going to stay out. I'm going to stay out of it and let those that get it invest in it. Hopefully this keeps going up for you guys and it keeps rising. The other one you wanted to know about is Upstart. Upstart is a buy now, pay later company, right? See if I got it right. This is a new type of I think that's Upstart, right? Where you do personal loans, car refinance, short-term relief, home equity lines of credit. Oh, okay. So these guys are lending money. Okay, they're like a bank. Okay. $5.28 billion market cap. Year to date, it's down 11%. It really fell from its high. It was trading up in the high 80s. Now it's at 55. 1 year up nicely because it was really down to $23 a share. So investors have made good money on Upstart. It is a really small cap, so these can really reward investors. The forward P is going to be 34. Currently, they lose money. Okay. They are growing at a good clip, 31%. Revenue is $758 million. Now they're smaller than I would have imagined, but that's kind of small. 31% is good growth. It's a small business though, small company. And these guys I'm gonna treat like a bank. Gross margins, all right. Profit margin. See, this is where they're losing money. Okay. Not a big deal, but it's just a riskier company. If they go on a bad run where a lot of their loans go bad, things get really, really bad fast for companies like this. See their book value? It's actually declining. It's a bad sign. If you saw a bank like this, you'd be very careful because that means their book value, the value of the bank is decreasing. And let me remind myself, all right, so book value is calculated by subtracting total liabilities from its total assets. So if liabilities are going up, it decreases the book value. Well, that's bad if you have a lot of liabilities. Or if your assets, if you're writing off assets, like you have bad loans and you're writing them off, so your assets are decreasing, that's a bad sign. So either, that's what we're dealing with in book value. And a decrease in book values makes this stock untouchable to me. I wouldn't touch it because of that ratio or that trend, that book value is declining. You want to see book value increase. Study JP Morgan. You see their book value increase and that stock's increased nice and smoothly. You see other banking institutions, the ones that you see the stock price really rise nicely is where book value is increasing. So keep that in mind. So Upstart is untouchable to me. SoFi, I understand people are making money, and people are making money on Upstart as well. It's just a different investment. Neither one is an investment for me, but I'm just going to give you my opinion as I see it. SoFi, I don't get. Their fundamentals are a little mixed. PEs are a little high. Upstart to me is uninvestable based on that book value trend. I think it's spelling problems in the business. Why are their liabilities increasing, or their assets are decreasing? Are their assets decreasing because they're writing off loans, which is a bad thing? It means people aren't paying them. Or their assets are increasing. Well, why is that? Right? Liabilities are increasing. Well, why would that be? So do your research on those. Those two, make sure you get it. Make sure you understand it. If not, go get an industry that you can understand, that you can make a great decision on, make lots of money. All right, so Bushy 1147, good to see you. Thanks for tuning in. Really appreciate it. You want to take a look at NEO? All right, let's take a look at NEO. All right, so NEO designs, develops, manufactures, and sells smart electric vehicles in China, Europe, and internationally. Offers 5 and 6-seater electric SUVs. Got it. Okay. And China is making good EVs. It's a pretty good looking car. Okay. Looks a little bit like yeah, looks like a nice car. Okay. Designs look nice. Swappable batteries. Look at that. Then you can do a quick recharge if they can swap out your battery. Okay. Okay, so that's NEO. Full lineup of cars. They're made in China. Got it. So let's take a look at the company fundamentally. Over the 1 year, this is down 18%. Year to date, down 19%. 5 year, down 48%. At one time, this thing was really, really valuable. $62 a share, down to $3.50. Is that deserved? Let's take a look. So we are dealing with US dollars. This is traded on the New York Stock Exchange. Just shy of 8 billion. Revenue is above that. Okay. Growth rate looks good. And this is in the Chinese currency. And they grew 23%. Looks good growth. Good growth. And this is, I believe, 0.13 is the conversion to US dollars. So 0.13 is 67. It's going to be about it's going to be about 8 billion, 8.5 billion in revenue, US dollars. So that is that number. Free cash flow doesn't free cash flow yet. And it's not getting better. It's kind of getting worse. See how they're burning more cash over time? Now the car business, let's look at these margins. See, these are really tough margins. See if we have one of those awesome businesses. So let's take a look at I'm going to look at A-Lab, because when you look at NEO, you're looking at a higher risk company, lower cap. This is a lower cap semiconductor company. This is the US semiconductor company. And I want to make a point. So industry by industry, you have different profitability types, right, on the product. And when Astera Labs produces one of their components and sells one of their semiconductors, they make 75.76% gross margins, and those will improve when they get bigger. So they sell $100 of revenue, they get to keep $75.76. That's what they get to keep from the prime cost, the cost of just making the product, not including all the costs for the back office, marketing, accounting, and all that kind of stuff, just the prime cost. When we go to the car business, it is so tough. They only make 10.21% gross margins. So when they sell $100 of revenue, just to pay for the materials, the labor, the direct burden to make the product, they only get to keep out of $100 sale $10.21. Then they have to pay the accountants, the HR department, the back office, the design center, the engineers, everything that makes up their cost of operating. Then they're deep in the red. Look at these operating margins. So is this going to change very fast? No, because of this gross margin line. This is the problem. This is why I'm not an owner of any car businesses. They're really tough. You have competition everywhere. The Chinese are killing each other. There's a big pricing war in China. The government's even thinking of stepping in because they're all undercutting each other. They already lose money in there. They just want the unit sales, so they're undercutting each other, which is not going to help gross margins. So that gross margin line is like totally unacceptable to me. Just cannot have it. You would have to have such high volumes to make any kind of money, and they have to deploy like a lot of capital. Let me show you. Now, the best businesses are the kind that you don't have to put a lot of capital into the business. It just grows, like Meta. They just keep growing. They just announced today that they're going to be able to monetize WhatsApp, and WhatsApp is communication application. Internationally, it's huge. And to do that, they don't have to like build giant factories and invest a ton of capital. Nope. They just put a lot of smart people together. They figured out how to do it, and they did it. That's a great business. NIO, to grow, they have to buy a bunch of materials, get a bunch of people to work in the factories, build factories, get robots, manufacturing lines. Just really expensive to grow. In fact, when we look at cash flows, right, they lose money, so that's a problem. And then they're seeing some adjustments to cash, but overall cash flow is negative, and then they have to put money back into the business. So NIO is just not investable to me. I want to pick businesses that make lots of money. I get to pick any kind of company that is publicly traded to invest in. I want to pick those that make more money. When you look at the investments I hold, and Bushy, you look at the member-only videos, like the one that I produced today is a good example. You see a lot of companies that have very high margins. I'm waiting for those really desirable businesses that get sold off for whatever reason. Then I buy them at a good price and make money. That's my play. I don't want to buy businesses that are just inherently poor. They're just not going to make a lot of money over time. And I hope that the stock rallies. That's just not my investment. So fundamentally, NIO just, I mean, literally the value of this company is zero. Because if you had an asset, you know, and I'm trying to think of a quick analogy. If you had a bond and it paid you $1,000 a month, that's $12,000 a year, and it was going to pay you that for 10 years, you could put a value on that. Now, if they said, I'm going to sell you a bond and it's going to take $1,000 from your account every month, you'd be like, what? What happens after year 10? Nothing. I'm just going to take $1,000 from you every month, $12,000 a year. And after 10 years, it took $12,000 a year from your account. You'd be like, no way, I don't want that. That's like a big penalty. What did I ever do? And that's a little bit how I feel about this CapEx line and the whole negative cash flow is, how's this business ever going to get over on top? Like, just start crushing it. Businesses that crush it, businesses that flourish, Let's go take a look at a business that flourishes, that nobody should really argue with, right? The great Microsoft, #1 most valuable business in the world. Well, it isn't by accident that when you go to their cash flow, you just see big, gigantic numbers. That's why Microsoft is worth 3.5 trillion. It's these big, gigantic free cash flow numbers. This is a situation where the business operates, and at the end of the year, they have $69 billion. All right, cool. Let's go buy another business. Let's put it on a balance sheet. Let's give out a special dividend. Let's buy back shares. All good. As opposed to a negative cash flow is, oh no, end of the year, we worked our butts off and we're further behind than we were the year prior. We're negative 15 billion in cash. That's terrible. Like, that's not the business I want to buy. I want to buy more businesses like Microsoft. High cash flow, gross margin 69%, not this 10% stuff. Operating margins 45%, not negative. Profit 35, free cash flow margins 25. So the big cap names teach us how to identify a really good business. So when we go to a smaller, riskier business and say, all right, smaller, riskier business, you're small, you're a bit unproven, that's fair. Okay, so PE ratio 372, that's a little high. No, that's a lot high. And then you look at these fundamentals and you go, wow, growing 200%. Well, that is phenomenal. But are you going to be able to make lots of money? Well, with a gross margin number of 75%, these guys are going to be making gobs of money if they get big. These guys turn into a $10, $20 billion revenue company and they keep their margins where they're at. These guys are going to be spewing out $10, $12 billion of free cash flow a year. These guys are going to be worth 200, 400 billion in market cap. And right now their market cap is 15 billion. So the analysis on Astera is in the member directory, and I did a video on it this morning. You can take a look at it, kind of look at that as an example of at least what I'm looking for in a really good business. I want the best businesses at the best prices. That way I can get the best return. So Bushy, that is my analysis on NIO. I like Chinese businesses. I invest in Alibaba, Futu, and a ETF. I might even own some NIO just through my ETF. But I didn't make a decision to buy it. So this is everything this ETF owns. I don't see it in there. Anyway, you get here it is. I own a little bit of NIO, but that's through an ETF. They kind of make me buy everything. I own Alibaba, Futu, and this ETF. And I own a lot of Alibaba, a modest position of Futu, a modest position of Franklin China ETF. So thanks for asking. I hope you found my comments and analysis interesting, and good luck. Yeah, so I'm right there with you on Docu. Good numbers. Just the market has it in for them, man. They hate DocuSign. Crazy. Have a good night, Mike. Saeed, CoreWeave growth. So let's talk about CoreWeave. So CoreWeave is not a semiconductor company. I'm very familiar with CoreWeave's business. It is back in the day, or I think we still call them a hyperscaler, a cloud company. So this CoreWeave is a cloud platform that provides scaling, support, and acceleration for Gen AI. So they basically buy technology from NVIDIA and all the other folks that provide the data center technologies, and then companies can use that infrastructure and then pay CoreWeave. That's That's the business that Microsoft has through Azure. Amazon has AWS. Google has Google Cloud. And there are other independent companies like CoreWeave. So CoreWeave is $76 billion market cap. It has been crushing it, right? 296%. This IPO, I have to say, was successful. It kind of sputtered out of the gate, but then it's just been on a tear. I believe that this is a highly overpriced stock. Let me tell you why. So first, no profitability. Okay. Even analysts are like, it's really expensive, overpriced. Okay. But let's look at the fundamentals. Remember that we looked at Microsoft, how beautiful those big margins, big cash flow look. So let's take a look. So these guys are growing quite nicely, 228 to almost 2 billion. That's phenomenal. Got to give them that. And then when we look at, so there's no free cash flow yet, and they're kind of burning more cash as they go. Gross margins, 74%. That is a very good gross margin number. Operating margin of 10%. So I think, so the negative cash flow is because they're buying so many semiconductors. They're putting them into service. They buy NVIDIA GPUs, they put them in their data center, and then people use them, and other technologies that go with that. Okay. All right. So where do I go with this? Cash flow is really bad. They're not profitable. Yeah, I can't value this company because of the cash flow. Will they ever be positive cash, positive? I don't know. But right now they're burning a lot of cash. And they do have, let's see what their balance sheet looks like. So their debt is 11.9 billion. So they're in some debt. They're burning a lot of cash, not a good combination. And they have a little bit of cash here, 1.28 billion. So what are they going to do to get more cash? If they are burning that kind of cash, where's the next pile of cash to put into their data center going to come from? See this cash burn rate? They only have 1.2 billion, and they don't make any EBITDA right now. One of the metrics that I like to have is less than 3 times EBITDA, and they have debt to EBITDA of 6. So these guys are really, really, really risky. These guys could go bankrupt someday. I don't want to invest in this business. I'll invest in, nice risky businesses like ALAB, but I'm seeing kind of like the light at the end of the tunnel is there, and they're growing really nice, good balance sheet. ALAB has more cash on their balance sheet than they do debt. These guys have a lot of debt, and they're in a business where they're competing against Amazon, AWS, Microsoft in Azure. They're competing against Google Cloud. Those are like, collectively, you add up those market caps, you're at $7.5 trillion in market cap. Those are 3 of the most valuable businesses, the 3 most powerful businesses on the planet. And these guys are trying to carve out a niche for themselves. I don't think it's going to end well with CoreWeave. We'll see how it goes. And the stock's been just on fire because I think the average investor looks at it and says, oh, these guys are an AI company. They must have some really special patent. They don't. They buy their gear from NVIDIA. Well, just about anybody could do that has money. They have a lot of debt. See, B of A downgrades CoreWeave. CoreWeave is expensive. I understand this business quite well. This is where I work professionally, and I think these guys are risky. So So that is CoreWeave. Thanks for asking. All right, so Josh, good to see you. Joey, good to see you. And all right, so that was a good little stream. Thanks everybody for joining. Looks like we've got a lot of people on the live stream. Let me go ahead and kind of land the plane. It's going to be a good week. We have Thursday off, by the way. I think it's Juneteenth, celebration of Juneteenth. And but we're going to be trading tomorrow, Wednesday, and then Friday. While I have everybody on the stream, I wanted to see if you would entertain being a paid member. Got several people that are paid members. Thanks so much for your support. Would love to see more people get signed up. And then we can talk about stocks on calls. You'd receive member-only videos, which that's what I'm primarily doing now. I used to produce a lot of videos, my analysis on companies, and I'm doing that. I continue to do it, but I only publish it out to members going forward. And it's deep analysis, 10 to 20-minute videos on companies. So you really see a valuation, how I see it, with looking at the desirability of the business, what their competitive position is in an industry. And you get all that. You can go with $10 a month, 25 or 100, and the perks increase at each level. So consider it. It's easy to get signed up. You go to the home page of my channel. You click this button that says join, and you are off. And it's easy to get signed up. Please consider it. So I hope that today is a sign of more to come in the form of higher prices. I think that'd be fabulous. We are dealing with a more expensive market, so do your homework. Do your homework. Make sure you understand the business, the value. What's your desired price that you would pay for that stock? Try to buy stocks at a good price. Don't just kind of follow the herd, because things really end poorly when that type of behavior exists. We have a solid correction. You'll see some of these high flyers, some of these CoreWeaves just get smashed. I think over time, like the CoreWeave company is, I think, going to have a lot of trouble. So, and as well as some other stocks that are just kind of casino stocks that a lot of people are buying them because a lot of people are buying them, but the valuations are terrible. The fundamentals look terrible. I try to really operate on fundamentals, rational investing, kind of like, hey, let me look at the numbers. I believe in the business. I think it's a good business, but the numbers support that business. The numbers support the stock price. The numbers support the growth in or the appreciation of that stock. It should be worth more. So that's what I'm into. If you're interested in hearing more about that and getting closer to that type of discussion, become a member. And with that, everybody, have a terrific evening. Thanks for tuning in. Good luck with your investments this week, and I'll live stream later this week. Take care.